The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Thank you for being with me today. So nice to have your company. How's the volume, folks? Would somebody just type into the question box and let me know that you're hearing it, everything? How are we going with that? Yeah. Oh, well, good. Kevin, that's good. Thank you. He's quick on the draw. Kevin, nice to have you with us, my friend. Everyone else, I guess, if Kevin can hear it, the rest of you can as well. All right. Well, nice to have everyone here. We've got a big roll up today. We've got our usual friends, Alan up in Brisbane, Michael down in cold and miserable Melbourne, Albert just doing a tutorial. Albert, I'm looking forward to hearing from you soon. We've got you for our new session, next session. Lots of everyone here. Danny, Greg Mapes, haven't seen you for a long time, my friend. Good to have you with us. Harold, the gold bug from Reading. Janet's gun trader. I hope you're trading as well as you were, Janet. Good to have you with us. Very honoured today. We've got Jerry Winter with us. Jerry, good to have you with us. This is going to interest you today. Justin down the Hunter Valley and Kevin Jackson's a new subscriber. Been with us for a little while. Glad to have you with us. Mick over there. He's doing a tutorial. Old mate of mine. I've known Mick, I guess, for 25 years, and he suddenly decided to do a tutorial. I think he's pretty thrilled with things. Okay, Mike Murphy is a tutorial guy. About time we spoke. Mike Big O as well, and lots of people here. Ralph Rob H from New Zealand. He's a gun analyst. Going to be very exciting what's going to happen in New Zealand in the coming year or so, I think. Tom, the wealth manager from Florida. Tony, lots of people. Good to have you all with us. Folks, today I want to take you through a little bit of a thought process because we're about to release the new time trading programs to you in a couple of different forms. And I wanted to take you through my thought process. This is something I've been thinking about for years and years. And it's probably been delayed by all the great gurus saying, well, you can't trade time, it's rubbish. Most people have said that about the Daniel Code until they find out about it. It's probably taken me longer to get to this stage than I wanted to, but most of you who have been involved with the Daniel Code, you've actually been trading a form of time in one form or another. The TO3 signals have an element of time in it. They're time and price based, but not a strong element of time. And today I want to take you on the journey I've been through to come to the view that time is the preeminent force in markets, and that it is stronger than stronger than price, I should say now. That's a little bit of a cleft fork because the reason it's more dominant than price is because markets have their own internal time clock. They're trying to run at an internal speed, and they change that speed periodically. They change it down, they change it up. If we were to chart every single price level on the members' charts, all you'd see is a sea of blue, because we could create signals from the daily matrix as we do now. We could go down to 240 minutes, 1 hour, 5 minutes if you like. The good news is that although the potential Daniel Code numbers go from 0 to infinity, markets use the same 5 numbers almost all the time. Like 99% of the time they use the same 5 ratios. So that's given us the capacity to at least focus down on those group, and then, as you know, we run some chi-squared analysis to see which are the high probability numbers to go on members' charts. Let's have a look at this, and I hope you'll bear with me. I had somebody send me an email after the last webinar saying, I didn't understand it, and I think it's rubbish, and I think you're rubbish as well. So whoever that was, I hope he's not here today. But there will be parts of this stuff, look, that you don't understand at first, but think it through, and we'll keep working with it. I would like you all to get to the stage of amazement about the price and time that the Daniel Code creates, I'd like you all to get the state of amazement that I am in perpetually. Nobody is a bigger cynic at trading than me. When I started trading, I got very enthused, and being an attorney, I thought you could learn trading from books and lectures and some practical experience. That's how you learn the law and most other things in life. And I spent a small fortune going to tutorials, seminars from all the gurus all around the world. I became the world's greatest GAN expert. I spent 12 years doing that GAN stuff. I had people trying to buy GAN charts and letters for me in London and San Francisco, and I mean, it was amazing. So I've been through all those journeys, and hello, Tony. Good to come up here, Chicago. Humid Chicago. When am I coming to Chicago? Not far, not too long now, mate, probably a couple of months. Yeah, Rob H. being in perpetual state of amazement, like a gift from you know who. That's quite right, absolutely. And this stuff all seems very counterintuitive. The Daniel Code's totally different to anything else you'll ever see or hear about. But we've been at this a long time now, and we've got a lot of you who are members who know it works and see it works. And for many of you, as Mick wrote to me 2 days ago, it's transformed his life. And I hope you can all have that experience. Anyway, let's work through this. First of all, I'll just make sure you can see what I'm seeing. Here we are. Yes, this is a daily chart of gold. And what it's got on it, the very simple the dotted blue lines come from the Trade Navigator Cycle Finder. And these are set at 29. So let's have a look what happens when you start running 29-day cycles. It got this low, then it got this intermediate high, then it skipped a cycle, then it got this important low here in June 2016. Then it gets the high, then it skips a cycle, then it gets the counter trend high, then it gets the big counter trend high, then it gets the low, then it gets the counter trend low, it gets the next counter trend low, it gets the next high, and misses the next high, and then picks up the major low in August. So that's about as simple as cycles come. 29 is the first of the major Daniel Code cycles, which is why I'm using it here to show you. That is just one static cycle. Now, cycle analysis is a lot more, that sounds very pompous, doesn't it? Thinking about cycles is a lot more complex than a static cycle. There's always more than one cycle. In the same way there's always more than one price ratio running in markets. In fact, there's more than one trend running in markets. Then you can, this depends on the time frame you're looking at. You can say the same thing about cycles. There is more than one time frame running in cycles all the time. But if you start off with this simple chart here, you just simply put on repeating 29-day cycles, you finish up getting a disproportionate number, because if this was random, and we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 cycles on there, you'd get 7 if this was random. And it's not random at all, because you're actually getting 1, 2, 3, 4, you can count as well as I can, 5, 6, 7, 8, 9, 10. You've got 11 just from one cycle. You've got 11 cycles that were accurate, gave you important intermediate highs or counter trend highs, etc. So that's the sort of thing that'll start you thinking about time. And from there on, we can go on and how do you put them on the chart, Janet? I'll show you, but probably not today, love. We'll have a talk soon. Let's move on. So this is the same cycle. This is the same chart. Still got the 29-day cycles on it. And what I've overlaid on this is the 44 cycle. And those of you who read my articles know that 44 is the dominant cycle for gold. And this is the gold chart. So you can see that Here we have the start of our cycle. Is at this mid-May low. This is 2017, and that the 44 gave us the next low. Once we've had a cycle act, we expect it to repeat. So there's the first iteration. Here's the second. It then finds the next high. This tool that comes from Trade Navigator's got a 1 on it. In fact, it's 2. It doesn't count the initial cycle. So that's 88 days. That's twice. And you see it move on until it gets to the 2.5 cycle, which is actually the 3.5 cycle, where it gets the next major low. So you can see here from this chart that there's more than one cycle working in charts. There's the 29 cycle, the dotted blue lines, and the 44 cycle is the red lines. Why 29? Janet, you should know. You did the work. It's the first number in the Daniel Code ratios. I'll send you your own spreadsheet if you've forgotten that, and do it again. Excuse me. And those of you who are interested in why 44 is the cycle for gold, go to the Daniel Code website, click on articles, and you'll scroll through. You'll see 70 or 80 articles I've written had published, and this one is called Masterclass 2, Timing Gold. If you read that, you'll see why 44 is the cycle for gold. Okay, so let's think we can accept the point that there's more than one time cycle running in gold. This is another cycle. This is the 59 cycle. This is probably the most famous of them. This is the 59 cycle, went high to high, first hop into the October 2007 high, which turned out to be the high. And then that's your first hop from, this is a high back here. This is the high into the 2007 high. It came exactly at 59, high to high on the first hop. And having happened once, we look for it to repeat. And this is where it repeated exactly at the March 2009 low. So I was running a tutorial in Taupo at the time, and we were buying that low madly. Very exciting stuff back in the day, and it'll come again. And this shows you, I hope, that these time cycles are such that they require more thought. This is the chart that really made me think about the price-time link. You can see this is just a standard Daniel Code trading channel on the long-term chart. This is, in fact, 6-day bars, these charts. And it runs from the low in S&P after the dot-com bust right up nicely to the high in 2007. And you can see how the bottom line intersects perfectly with two of the important retracements that went on in that period. Now, these channels are forms of an angle. They're a special form of an angle. But anything that is an angle on a chart has qualities of both time and price. You can put your cursor on any point at an angle and you can read off time and price. Time is what you're getting on the y-axis along the bottom of your chart. Price is what you're getting on the x-axis running up and down your chart. So if you think of this as a navigation exercise, those of you who are yachties or boating people will know that it's pretty easy to pick up one bearing when you're out at sea, or even when you're traveling along any waterway. It's easy enough to pick up one bearing, but if you can pick up another bearing at somewhere close to right angles, or at least a significantly different angle, the point where they intersect is where you are. And that's what brings excellence and precision to navigation. And I'm a long-time yachty and love ocean racing, and done a couple of Sydney to Hobart races and all that sort of stuff. And I kept thinking about this, that all of these angles, these fourth and fifth seal angles and the Daniel Code trading chart, all this stuff is giving us the same thing. It's giving us a direction where it continues, but it's not giving us that cross where we get our cross bearing, as it's called. So that moved on to more of this process. I'm trying to take you through it, of thinking about what makes markets turn. That's really the whole reason for being of the Daniel Code. I always wanted to know what made markets turn, and as I say, I spent many, many years trying to learn from other people. And most of them, I must say, were all very nice folks, but it just didn't work well enough to build that steady equity curve that you need. So we know what we're doing with price signals. We've had that for a long time. This is the January high in the S&P. And we had a Daniel Code blue line there, the extensions of the range, the blue lines. The red and black lines are retracements of a range. So we had a blue line at 2878, and the market duly ran up there. And if you look at that on a price chart, which is what this one is, you'll see that the time it got to the high, what we call the fast stochastic, the 533, was overbought. Our proprietary momentum indicator was screaming divergence, and that became an absolute standard price sell signal. If you look at what I put underneath here, though, I put the stochastics overboard all this time. So what we need for price signal, the first thing we need is target recognition. And that's what makes the Daniel Code different to everything else, because these Daniel Code numbers are not fib numbers, they're not old highs and lows, they're nothing you've ever seen before. They're ratios created by the market itself, and they're incredibly accurate. They're like magnets for markets. So the first thing you need is target recognition of a known Daniel Code number. Next thing you need is an overbought or oversold stochastic. The third thing you need is divergence on the momentum indicator. So if we're talking about price turns, they're the three things that we require, and they've all got to happen at the same time. The problem with that is that, as W.D. Gann so prophetically said, the problem with stochastics is that they can stay overbought much longer than you can stay solvent. And you can see in that period when this stochastic is overbought, there are three other signals that were elected. Only one of them had a price level at it, but still, that's the problem with stochastics. So there was a completely standard signal based on price. Now, all of that's good. We got that. All of the clients got that. That was fine. The problem with trading price is it will pick up the major turns. In fact, it'll pick up the intermediate turns as well. But it doesn't really give you a lot of guidance as to what to do afterwards. And I know that it's very hard for most of you to pick up the early trend changes. If you've done a tutorial with me, you know how to pick up trend changes pretty well before anyone else. We usually pick up trend changes on the first change of trend, which most of the rest of the world doesn't see as a change of trend, which gives us a decided edge. But here you see nice easy sell signal. Wasn't that sensational to start with. Then it mucked around for a couple of days, then it went bang and let go, big money, down to the low. What price will do is gave us the high and it gives us the low. We got both those turns on price. It didn't tell us what to do in the meantime. And the great attraction of time is because we can break time into much smaller fractals than we can reasonably do with price without actually driving ourselves mad with, what they call it, paralysis by analysis. If you have too much stuff on your charts, you just never make a trade. One of the things about time that's so attractive is that it's fungible. It can be moved into different ratios. As long as you stick to the basic fractals of the Daniel Code major ratios, every fractal of those ratios is a valid time ratio. So we get much more flexibility. I think that's what I'm trying to say. I'm still talking about cycles. This is the back on the S&P now. This is the 59 cycle at the 2018 high. So at that high, we had 2878 was the Daniel Code blue line. We got that price, and we got a time cycle at the closing high as well. When we get time and price at known Daniel Code levels, we have, you're sick of me saying it, we have what we call time and price squared, in which case a turn becomes almost inevitable, as it was at the January high, and as it was at the subsequent little crash low in there. So time is giving us the cross bearing. So you can see we've still got that great long stochastic period there, but in that whole long stochastic period leading up to the January high, we only had 2 time signals valid. We had a 44 signal that didn't trigger anything, and then the 59 gave us the top. And it's that cross-bearing, it's the ability to get a signal that's at a considerable different angle to your main bearing that gives you the cross-bearing. And that's exactly what happened there. So there's always more than one trend and more than one time signal at work. You can see here, the last chart I showed you had the 59 cycle at the January high. Here we have the 70 time cycle at the January high. And you can see where it started from. It started from a low before the low. And that's a very, very valid point to start time counts from. And also the 4th and 5th seal run from highs before the high and lows before the low. So you can see we actually had 2 time cycles at the January high, 1 day apart. Now these time cycles are valid for plus or minus 1 day only. They're very, very accurate. And the reason for that is that you can start these time cycles from either from a bar high low or on the close. So you can see this one here, the blue line, the left of the chart over here, right on this line here. This starts from a low before the low, and while it's the chart low, the bar low, I should say, it's not the closing low. In fact, the closing low of that little move doesn't come for another 5 days or 4 days. So by the fact that we can start the count either from a bar high low or a closing low, high low, that gives us the plus or minus variation of 1 day. So you can see at this high we had 2 time cycles plus price, everything lined up perfectly. All right. So you can see as we move along, this is still running on from the January high in the S&P. The low came at one of the Daniel Code time cycles at 25.28. Then we got 2 rallies, and we got 2 trades, 2 price trades out of the same rally, which was rather cool. And I'll just highlight that for you in case you don't know what I'm talking about. This bar here, this grey outside bar, hit the 2788 retracement. So did the bar before. It was only about 5 or 6 ticks away. And then that's target recognition at the bar high. Look what happens here. At this high, you have target recognition on the close. So the chart, if you looked at the chart without knowing the DC numbers and how they work, you would say this market made a higher high where it has the 70 time cycle on it. But in fact, it didn't. It made an equal high. And of course, amongst other things, that sets up the Daniel Code hook trade. Okay, so that's what price can do for you. It's all very good. We've been using that for all our trading lives, but this is much more exciting. Let's move on. So prices get the intermediate turns all right. You can see here, again, this is just moving on. This is recent trading in the S&P. You had the April high. We got a price sell at the 2711 number. We had a close almost exactly on that number. Everything else was set up, stochastic overbought, divergence on our momentum indicator. And at the next high, we got the target recognition at a different number, the next Daniel Code number, 2741. We also had target recognition at the close, as I showed you in the previous chart. So that's all great stuff. Look what happened at the next high. I know it's a hook trade, but we didn't get a price sell signal at the next high. And that's because, I'll just give you the dates for that, folks, so you can follow this a bit closer when I give you the recording of it. That high, this is the second high. Yeah, this is, we're looking at May the 22nd, 2018. You didn't get a price sell signal at that high. Okay, so there's the good and the bad of trading price. So price alone is very good, but it's not good enough. If you look at this next chart I'm showing you, you can see that on the downside, price reached the Daniel Code targets on both those numbers. So they are at, see if I can give you the correct numbers here respectively. The first one we're looking at is May the 3rd, 2018. The next one we're looking at is May the 29th. Price reaches the targets, but there's no price buy signal because we're so reliant on the stochastic. Yes, now I know you can have much faster stochastics, and I know you can alter the time signals as well, the time period of the chart as well. The problem is if you have endless numbers of stochastics and endless different time variants that you're looking at a hour chart, a 15-minute chart, a 5-minute chart, it's not worth it, folks, and I encourage you not to do that. I've traded every known combination you can think of, including 3-tick charts for years and years and years, all night, half the day. The most money is made by trading daily bars, and that's a simple fact. Most of the people who've done our tutorials can vouch for that. But you can see here are the limitations on price, that as soon as we say we're going to use a external indicator like a stochastic, we don't get the signals which we need. We get some of the signals, that's good, but it's not good enough because we're aspirational. We're always aiming to be better than anyone, better than the world. So let's see what happens as we move on from there. So this is still the same chart. This is the S&P. And you can see that what became so interesting here, and I mean, I'm showing you a cut-down version of what's taken years and years and years to work out. The high of the S&P in January came exactly the Daniel Code number. We know that, and it came at an angle. That angle is actually a fifth seal angle, the one running up to the high. The low, the first low we had, the sort of rebound low in February, that came at a fourth seal angle. And the next low also came at a fourth seal angle. Now, as I've told you, any angle has elements of time and price. So if these markets are turning at fourth seal angles, that's proof that they're turning at more than just price. They're turning at time and price. Okay, so that's the thinking there. And let's think about the studies that we use on our charts. The DC extension price targets, they're the blue lines, and the retracements, they're the red and black lines. They're exclusively created by price. The DC time cycles are exclusively created by time. Stochastics have elements of price and time. What a stochastic is telling you, the way they're normally set up, is it's telling you where the close is in relation to the close X periods ago, whatever you set it up for, and there's a very clever little mathematical process going in there that lets you show it as a pretty picture of wavy lines. Momentum indicators show current momentum compared to previous momentum. That's how we get divergence. We say the market made a new high and the momentum indicator did not. That's divergence. So it's actually showing current momentum against previous momentum. So it's using price and time. And the fourth and fifth seal are angles. And we surmise if markets turn at angles, then they are recognizing both price and time. But we know that price alone does not turn markets. We can put all of these retracements and heaps of blue lines on charts, and if they're in a strong trend, they'll recognize some of them, they'll ignore some of them, they'll go on and on until they eventually find the number that they're going to turn at. But forecasting that number at which they're going to turn is quite a complex program. So we do know that price and time combine to cause market turns. I've been showing you these time and price squared charts for a very long time. The final question we really have to ask now is whether time alone can cause market turns. Remember always, trend is always the alpha and omega of markets, and I use that in the biblical sense. I'm the alpha and the omega, the beginning and the end. I'm not talking about options and using the Greeks for that sort of discussion. So we can find price at most turns, either at the bar high-low. You can see how this market just keeps whipping between the Daniel Code numbers and ratios. And we can find that most turns that way, or on the close. The ones that we don't get on the high-low, we can get on the turns, on the close. You should maintain a close-only chart. It's a very simple function in Trade Navigator to just click on a close-only chart. So we know we get the major turns from price, but then we run out of what to do. If we're simply waiting on price, we run out of what to do in the intermediate stages. I keep thinking of a enormous copper trade we had last year where we had the plus buy signals. The next bar gave a change of trend, which told you to hang on to that trade and hang on to it. It went on and on. It was worth about $8,000 or $10,000 per one contract. But what we've got, what we've been telling Peter, I'll come back to you on that. While we've been getting these great turns, good for you, I'm not giving you enough guidance. In fact, I give you really no guidance once the turn is affected. What I want to do is be able to tell you when you have had a signal that's created a trend change, so stick with it, or a signal that's just a counter trend. We can identify that very easily, but we haven't been able to show that to you on a program, which we're now going to do. So let's move on. So time signals, this is a big difference here. They give us the exact same major turns, but they fill in the blanks because they are so much more divisible. We can get down to much smaller fractals of time than we can of price. With price, we've got a degree of being static tied to the matrix that creates the blue lines. The red lines, black lines are also they're pretty static. They've either got a high and a low that you can get your range from, and there's sometimes more than one. But with time, because we can get down to much smaller fractals, we can get all the intermediate signals as well. And that's the big difference. So I've been talking to you in the last webinar and this one about 6S, the Sixth Seal. And this is our new programs, which we've been working on for a very long time. Some of this stuff has been in the incubator, if you like, for 3 years now, some of it even longer. But let's keep thinking in this idea of time. So we know time cycles vary and they're variable. I showed you that in the early chart. We also know there's more than one time cycle at work at any time. So by using fractals to DC ratios, we can identify almost all of the short-term time cycles. For me, 1 to 4 days is short-term, 1 to 7 days sometimes. Like price signals, time signals are conditional only. They mean nothing. They're just conditional until they are elected. Which means if you're looking at a chart and there's a high on there and we've got a sell signal, don't for God's sake sell now. You have to wait for the signal to be elected. I know that there are lots of you who like to try and sell at that pinpoint high and buy at that pinpoint low. And I've seen an awful lot of that, and it's a quick way to lose money. Once we've done our analysis, we don't have so much hubris that we say the market has to turn. The market doesn't have to do anything. The market will do what the market does, with you or without you, with me or without me. What we want the market to do makes absolutely no difference to the market, I can assure you. But what we do is we group together probabilities so that when these signals do become elected, that is, if we're right in our analysis, the market will go to our entry price, and that's the time that the order becomes valid and is executed. So we can vary the operative time cycle to support daily signals, and we can combine time cycles to support swing trading. Those of you who regularly come to these webinars will remember in the last 12, even 18 months perhaps, I've been showing you these moonbeams that we can do on daily charts. I haven't always been able to do that. That's taken years and years to develop the stage where I have sufficient confidence in them to put them on charts, to show you, to use them in my own trading and in the signals I create for you. And the moonbeams are a real clincher because they're like a double fourth seal, if you like. They're a fourth seal with additional confirmation, or a fifth seal with additional confirmation. And they work so beautifully, you have to come to the realization that time is at least as important a component as price. But because we have more variations of time, because we can use smaller fractions of time than we can of price, it's going to give us a much better flow of signals. Okay? So we have both a manual and a semi-auto trade program that we've been running for, since the beginning of the year. The manual, Terry's making the changes to the website now, and we're going to have that manual version available for you in early July. We are going to, incidentally, take off a week's holiday in early July. We'll actually get through all the 30th of June stuff fun, but then we're going to take a week shut down so we can, everyone needs some time away from trading. Gives you a chance to catch up on all those personal chores, house chores that we all have to do. Go to the dentist, what have you. We try to take off 1 week a quarter, and we haven't taken off any time apart from our Christmas holiday, which is forced on us by the state of the market, since about September 2016. So we will be taking off a week in January. That'll also let Terry put in these new pages that we're going to have to put in to bring you this new trading program. And what it'll be, there'll be a manual version which will look very much like the existing signals that we create in the inside the Daniel Code platform. Let me just tell you what that link is. I should know it by heart. I put signals in every single day. It's called the Trade Program. It's going to look very much like that. It's going to be a page that will open up and see if I can get it to open up now. Here it is. It's called the Trade Program. It'll open up like that. It'll tell you what the buy and sell signals are for each selected market and where the entries are and the type of stop to use. What we use at the website, where we have the daily trades, the website is designed to be really, really defensive. So we recommend there that people move their stop when they get to the break-even point. They move their stop to break-even. Many times that's fine. Equally many times you'll get your stop to break-even, the market will stop you out, and then the market goes on to have a big day. There are other ways to celebrate U.S. independence, Kevin. Oh, 4th of July. Yes, your independence, of course. Of course, yes. Well, we'll be on holidays for a week shortly after that. So the manual system will be available, I've said here, the 9th of July. The auto trade will be available when we've completed a month's testing. That actually trades in a third-party platform, which is pretty exciting. For you, Jerry, it's going to be it's a leader follower, which is what you've been asking for. Jerry, of course, looks like he'll have his own leader follower program for us on their new trading program at Photon. So Jerry's going to call me next week and tell me how they're nearly finished with all of that, and we'll be able to include the Daniel Code trade signals as well as the Daniel Code studies for Jerry's clients. Okay, so this is a variation. What I'm talking about now is a variation of our CTP program, which I've talked to you about previously. The CTP program, all CTP programs are continuous trade protocols. They keep you in the market almost all the time. Let me see where we are here. You can see from this chart, every high, every low, and the counter trends in between. As far as I can see, there isn't a missed trade. This chart runs from late January to towards the end of May. And there isn't one missed trade. Now, all of these are time signals. Some of them are also price signals. But the beauty about trading time is that it brings you much closer to the market action. And what CTP programs rely on is being in the market almost all the time and being rewarded by the inherent volatility in markets. So markets that have good horizontal movement up and down and up and down and up and down, they're good trading markets. Markets that are just going sideways, like natural gas seems to have been for a long time now, they're not good trading markets. And market selection becomes absolute key to the performance of these success trading programs. So they're going to be creating a signal every time a time cycle expires. We can use any of the major DC ratios and their fractals. If we start with 29, which is the first number we find when we try to extract the Daniel code ratios, we can get the fractals of 29 down to quite small time periods. So we can create a new time trade signal almost every day. And we combine that with trend continuation signals and differential stops management. And that keeps us in the market, very close to the market. As the market moves up and down, we make money both ways. But market selection is the key to performance of all sorts of trading. If you're in a consolidating market, you're not going to get results. In fact, you're probably going to have losses. So what I've said here is that CTP will outperform all other programs in markets that I'm aware of, provided those markets have good horizontal movement. But CTP struggles in consolidating markets. Everything does. Market selection is absolutely key to performance. So for that reason, we're going to offer a number of different markets, and I'm going to chop in and out of those markets as we find them entering into consolidation. Some of the time, probably no better than 70% of the time, we actually get signals that tell us the market is about to consolidate or is consolidating. And usually by that time, you've had either one or two losing trades on that market. There are two techniques to deal with consolidating markets. And the easiest one is to just stand aside and execute trades in a more dynamic market. But you need to have, if you're going to trade 3 or 4 markets, you need to have double that number under review so you know which ones you're going to go to if you see a consolidation in a chosen market. Kevin, I'll get back to you on this series of questions. Just give me a few minutes, my friend. I'm sure if you're asking them, other people are interested as well. So trade execution is vital. This was the trade in today's trade in the US dollar index. Code is DX. Just hold a moment, please, folks. I'm sorry to have interrupted you, folks. This is today's trade in the US dollar index, and I'm showing you this to make the point that good execution overcomes all sorts of issues. This a market, we had the sell signals off the top of it. Let me find the correct dates for this so we can see what's happening. Here we are. So the here was our sell-off. The first bar down, May 31st, gave us a change of trend. Very important. We had a blue line and a TO3 signal right at the high. We had a blue line number at 7673, the high of that bar. No, I'm on the wrong. I'm looking at the Australian dollar. Here I am talking to you about the US dollar index, which we were on the previous slide. This is the Aussie US dollar. This is the Forex market. I don't talk enough about Forex. A lot of you trade Forex, and I tend to spend most of my time talking about futures. So we'll certainly put much more of an emphasis on Forex in the coming months. So that high in the Aussie came on June the 6th. And the high of that bar was 76.77 against 76.73. So 4 ticks difference. That's not even the buffer we use in Forex. So four ticks out of a possible 7,600 ticks. You can see it's considerably less than 0.1%, which is the differential we allow. Big point there is as soon as that trade was elected, after that high, you had an inside bar the next day. Then that trade was elected on June the 8th. That changed the trend of the market to down, which was the signal to hang on to this trade. And if you just hung on to this trade, there'd been no buy signals in the meantime. Keep moving your stop down, either a 2-bar trailing stop, or when the fast stochastic gets oversold, a 1-bar trailing stop. You've had a really easy $1,300 just for sitting on that trade for 1, 2, 3, 4, 5 days, one of which was an inside bar. So this idea of matching time and trend is not only going to give you the turns, it's going to tell you which trades to stay in. Okay, now remember, even that decision of what's the trend, that's conditional. We can have, and often do have, as we had here, we had sell signals from the big up bar on June the 6th, that's the high, and then the trade that we entered into for Friday, that's the first down bar, which says this bar changes the trend to down. At the time we put that trade on, we assumed we would be trading a counter trend. The trend is up, so if we're selling in an uptrend, we assume we're trailing a counter trend. And we can be much more aggressive with our stop loss protocol. We can have tighter stops. We can deal with the stops differently. At the end of that day, on the when we saw the close of that bar, we knew that there was a probable change of trend. I say probable because everything in trading is probability. That's what we're dealing with all the time, is probabilities. There are no certainties in trading, which is the same as life. Life's all about probabilities. But having the ability to combine time and trend, this is this time trend equation. I'm trying to explain to you how I got to this point. It might all sound a bit cumbersome, it probably does. I'm not as bright as I used to be, and it seems to take me a long time to work all this stuff out. But that time trend equation gives you much more than the turns. It also tells you when to hold. And this was the perfect example. Okay, so let's see where we are. All right, I think we've finished most of the stuff on the charts for the moment, folks. I'm going to answer some questions here that I've got, but if you want to be a super trader, email me, jneedham@thedanielcode.com. Give me your phone number and country and location, so I'm not going to be calling you in the middle of the night and waking you up and annoying your wife or girlfriend or whoever, or husband, in fact, the ladies we have with us, or other friends. But I'm happy to call and discuss your trading and see if we can take you right to the next level. Interesting, 2 of our most successful traders never saw a chart before they came to me, and they are super traders now. So if you're interested in being a really seriously elite trader, shoot me an email. I'll be happy to make contact with you, and we can talk about a tutorial or some other program to get you there. You're most welcome, if you haven't already, to have a free trial of everything at the Daniel Code. Just go to the website, hit the free trial button, follow the prompts, and also in conjunction with Genesis Trade Navigator, who are our partners. If you haven't already got Trade Navigator charts, which I use exclusively, we will be happy to arrange a free trial for you. And that is the end of our PowerPoint for today, except for the compliance statement. Always very important that people read compliance statements. The general idea is that I think they say 3/4 of traders will lose their first bank in 90 days. I think that's hopelessly optimistic. My experience is that 99% of traders lose their first bank in 30 days. So if you don't know how to trade, for goodness sake, don't use real money. Don't risk real money. Paper trade, learn to trade when you're really comfortable that you are getting the results out of your paper trading that you expect. Then you can gently put a tiptoe in water. It's an absolute bloody shame. The amount of money that's lost by people who charge into futures trading is absolutely dreadful. But of course, the amount of money that people are making who actually know how to trade is very, very good indeed. Okay, here we are. So that's the end of our slideshow. And let's see what we've got here. We've got a number of questions from Kevin. Okay, let's see it. Now, I don't know, Kevin, what the... I don't see it. Just a moment. We've got some more questions coming in. I'll just expand this box a bit because it's an important one. From Rob. Oh, thank you, Rob. Rob enjoys that. AI CTP 6 like CPI will be embedded in your trade body one day via biometric sensors. You're very good. Thank you, Rob. So when I say auto trade, it's only going to be a semi-automatic trade. All of us should know, if you don't already, that some of the big firms that are auto trading has absolutely ruined people. I know a lady, she's not a client of mine, but I know her, who got onto a complete auto trade program run by one of the very, very biggest firms in the business, Wall Street, and she went away on holidays and the auto trade just goes on trading, that version of it, and it wiped her out of close to $750,000. We will never do that, as Rob says. All of this IT stuff, it's a trap. It's a two-edged sword. I'm a Luddite. I don't like technology because I'm an older guy and I don't understand it. And I seem to have managed very well without much technology so far. But it's easy to program things, and then they run away with the horse runs away with the cart. So when I say auto trade, it will only be a semi-autonomous version. You will have to trigger it every day so that we know that there's a human being's eyeballs overlooking the charts and the program, because there are too many damn problems with IT. Greg, where is Jerry Winter now? Go to the Daniel Code website, which will be coming up for you in 1 second. Here we are. Greg is a very old client of ours. Jerry, we haven't seen for a while. Just go to contact here somewhere or other. Here we are. Contact us. And here's Jerry Winter. fptrading.net. His phone is, as you can see there, US 312-987-2078 US. Where will he be now? He'll be at home with his beautiful wife and children. Okay. So you can contact Jerry. Jerry's done a couple of Daniel Code tutorials. He understands the Daniel Code very well. He'd be delighted to help you. All right. So that's absolutely so, Rob. Absolutely support that 100% now. Kevin. US Independence Day. We don't have that in Australia, mate, but I very much admire the great fun you have on Independence Day, so enjoy. Now, Peter, if you're using specific angles, your chart obviously needs to be correctly, constantly scaled. Correct? No, it's not, because you're using the bars themselves to create the fourth and fifth seal. It doesn't matter what the scaling is; they'll still go to the same point. As long as you have more than 2 points of attachment to a chart, then the third, fourth, fifth, and infinite points will all be exactly on that line. So does the signal arrow appear on the bar close that the arrow is on? Does the signal arrow appear on the bar close that the arrow is on? Well, I try to put the arrow as close as I can. You can see this this arrow goes onto this bar. This is the bar that created the signal, Kevin. The next day, this is actually an inside bar. The trade was not elected. You carry forward the last valid signal you had, and it was elected on this bar here. But this is the bar that created the signal. So I put the signal on the bars that create the signals. Otherwise, if I said down here, this creates the signal, you'd say, I don't understand why. So I put the note on the bar that creates the signal. Okay, what else have we got? There's Jerry. What do you do with odd fractals? 11 and 22 are fractals of 34. What do you do with 29.5 and 14.7, which are fractal of 55? No, you're not misunderstanding fractals, Kevin. You're exactly on fractals. We round off the decimal points because we only have 5 days of market trading now. We used to have 6. Markets used to trade on Saturday morning, and we've lost that since the war, and everyone has more leisure time supposedly, so we can't actually put these numbers on as precisely as we would like. That's why for the TO3 signals, they're valid for 2 days, including the day of posting, and the blue line signals are valid for 3 days, including the day of posting. And that leeway is the same argument as saying the time cycles, the expiring time cycles are valid for plus or minus 1 period, because they can be started from either a bar high-low or from a closing high-low. And often those bars are next to each other, they're juxtaposed. So that's why we have that variation. That's why the signals are valid for more than 1 day. When you get to time trading, they're not. They're valid for the next day, and that's it. It's very, very rare to see it. It does happen. I've seen it happen. It's very, very rare to see a turn on which you don't have a time signal. When I say rare, I mean like 2 or 3 times a year. Apart from that, you've got your time signals on everything. Okay, so I hope that answers your questions there, Kevin. Yeah, you can spend half your life with time cycles. I have, and I certainly commend them to you. It's marvelous how they work. And of course, for those people who say, oh, your time cycles don't work, it's because they don't know what they're doing. If you dig deeply enough, it's the old thing from the Bible, seek and you will find, knock and the door will be opened. If you put in enough time and enough work, all these things are revealed to you. And it's extraordinary. And I'm sure there's much, much more to come. Keep up the work, put in the effort. It's really wonderful stuff. And I'll be talking more about this as we start to release these new programs for you. Okay, I think that's it, folks. Thank you for being with me today. Enjoy your weekend. Kevin, thank you. I'm glad you enjoyed it. Janet liked it too. That's great. It's Friday down under, folks. It's 11:30 a.m. on Friday morning, so my trades are on, and I'm finished for the week. So there we go. Mike, time we talked, old fella. Let me know when we can have a chat, and we'll catch up with you. Tom as well. Thanks, glad you enjoyed it, folks. Interesting stuff, this, isn't it? It's just keep thinking about it. Chris, you too, keep thinking about what I've been talking about today. I've tried to take you through this extraordinary process that I've been seeing, that gradually I've learnt a bit more. And finally it's come together enough now to say that, we actually got a pretty good idea what this stuff is doing now. But oh boy, it's an exciting adventure. The more you learn about markets, you'll never be disappointed, I promise you. Time learning about what makes markets turn? That's really what the Daniel Code was born for, because I got so frustrated with everything I'd learned from all the gurus that didn't work, that I said, I have to really, this many years ago, find out what makes these markets turn, or I have to go back to my law practice and stop wasting all this time on markets. So unfortunately, I did find out what makes markets turn. Thanks for that, folks. Shoot me an email if you're interested in doing a tutorial. They're $7,500 US is the fee, so don't feel embarrassed to talk about it. Let me know if you'd like a tutorial. I'll give you a call. We can talk about your trading and what else we can do to help you. So enjoy your weekend coming up. Marcel, how lovely to hear from you, my friend. There's one of our most long-standing members of the Daniel Code, Marcel Vienne. He's a doctor, very, very lovely and most admirable gentleman. Marcel, he speaks French. He's up in the French-speaking provinces of Canada. He speaks English very well also. Nice to hear from you, Marcel. All the best, folks. I look forward to catching you at our next webinar. Bye-bye for now.